Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings, and today we have Nutra Pharma Corp's quarterly report. I know it sounds dry, but trust me, there are some seriously interesting numbers and big risks packed in here. Before we dive in, if you love getting the real dirt on companies, dig deep into their financial reports, and understand what those numbers actually mean, make sure you hit that subscribe button and ring the bell. Also, we have a fantastic community over on Discord talking about these filings, so definitely check out the link in the description below. You will not want to miss it. Alright, so this is Nutra Pharma's quarterly report for the 31st of March of 2023. Now, this company is in the biotechnology space and they sell pain relief products. Let's see how they're redoing. So first up, let us look at their balance sheet. This is like a snapshot of what the company owns and what it owes at a specific moment. They have total assets of about $724,000. That sounds okay, but when we look at their liabilities, things get a lot more interesting. They owe over $13 million. That is a massive difference, and it means they have a huge deficit of almost $13 million. This tells us right away this company is in a tough spot financially. Now onto their income statement. For the first 3 months of 2023, they reported net sales of about $54,000. Not exactly a blockbuster number, but they also report sales to a related party that are over $100,000. This is a bit of a red flag. When a company does a lot of business with itself, or with companies owned by its own executives, it can sometimes hide problems or make the overall picture look better than it really is. Their gross profit, which is what is left after they pay for the cost of making their products, was about $103,000. That sounds pretty good compared to their sales, but remember a big chunk of that is from that related party sales. When we add up all their operating expenses like marketing and administrative costs, they lost almost $400,000 from their operations. That means even before considering interest and other expenses, they are losing money by just running the business. Now here's where things get wild. In the same period of 2022, they had a massive gain of over $5 million. But in 2023, they had a loss of almost $200,000. That huge swing is largely due to changes in the value of convertible notes and derivatives. This is a financial instrument that can be converted into stock and its value can swing wildly. This kind of volatility makes it hard to predict the company's true performance. And the bottom line, for the first 3 months of 2023, they lost nearly $600,000. Compare that to the same period in 2022 where they made over $5 million. That is a huge step backward. Looking at their stockholder S deficit, which is basically the total money invested by owners minus the losses, the numbers are even more stark. They have a common stock to be issued line item of over $469,000 and an accumulated deficit of over $74 million. That is a massive hole they are trying to dig themselves out of. Let's talk about their debt. They have a lot of convertible notes. These are like loans that can be turned into stock. They value some of these notes at fair value, and it is a huge number, over $1.7 million in 2023 alone. And remember, a big part of this is categorized as level 3, which means it is based on unobservable inputs. This means it is hard to know the true value, and it is based on the company's own estimates. They also have a warrant liability valued at over $2,000. Warrants are like options to buy stock, and they can add a lot of complexity to a company's finances. They have so many promissory notes outstanding. We see notes from 2016, 2017, and even earlier with various unrelated third parties. Many of these are in default and under negotiation for settlement. For example, a note issued in August 2016 for $200,000 has an outstanding principal balance now of only $91,000, but a whopping $65,000 in accrued interest. That is a lot of interest on what is left. Their list of convertible notes payable to unrelated third parties reads like a novel. We see notes from multiple years with various interest rates and conversion options. Many of these have original issue discounts, which means the company received less cash than the face value of the note. This is also a way of increasing the effective interest rate. And then there are the convertible notes payable at fair value totaling over $1.7 million. These are the ones that swing wildly in value, affecting their profit and loss statements dramatically. Their property and equipment is listed at about $74,000. This is not a capital-intensive business. Under accrued expenses, they list over $680,000 for settlement expenses. The footnote explains this relates to a final consent judgment from the US District Court. For the Eastern District of New York, they were ordered to pay over $500,000 in disgorgement and penalties. This is a significant amount for a company of this size. Going back to related party transactions, their net sales to a related party were over $100,000 in the first quarter of 2023, up from just $8,000 in the prior year S quarter. That is a huge jump. This related party is Avini Health and Nutra Pharma. S CEO is an owner of Avini Health. This definitely raises eyebrows. Looking at their cash flow statement, it shows they used over $92,000 in cash for their operating activities. This means their day to our business is burning cash, not generating it. And overall, their cash decreased by over $83,000 in the first 3 months of 2023. They started with very little cash and ended with none. Now it is time for the really important part, the company's own assessment of its financial health. They openly admit they have recurring significant losses, an accumulated deficit of over $74 million, and a working capital deficit of nearly $13 million. They literally say there is a substantial doubt regarding their ability to continue as a going concern. This means they might not be able to keep operating unless they get more money fast. They've also been issuing stock to settle debts, which dilutes existing shareholders. For the 3 months ended the 31st of March of 2022, specifically they issued stock for settlement of debt valued at over $54,000. And look at the weighted average number of shares outstanding. In 2022, it was over 14 billion shares on a diluted basis. That is an incredible number of shares, and it means each existing share represents a smaller slice of the company. The legal section details several lawsuits. One is a settlement of over $125,000 for a promissory note dispute. And then there is the big one, the Securities and Exchange Commission lawsuit. After years of legal battles, they reached settlements. The company itself was ordered to pay over $680,000 in disgorgement interest and penalties. That is a huge amount and clearly a major financial burden. The former CEO Eric Deitch and another individual also faced penalties. Overall, Nutra Pharma Corp is in a precarious financial position. They have massive debt, significant losses, and are heavily reliant on outside financing. The settlement with the SEC is a major financial hit, and while they are trying to market their pain relief products, the numbers just are not there yet to suggest a turnaround. They are heavily dependent on that related party sales, and a lot of their debt is in default or being renegotiated. It looks like they are really struggling to stay afloat. That is our breakdown of Nutra Pharma Corp's latest filings. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.